Goldman Sachs.
Goldman Sachs.
Goldman Sachs.
Goldman Sachs.
The loans that were blamed for the worst financial crisis since the Great Depression
was hit today with a record fine of $550 million.
Goldman Sachs, which had a controversial role in the global financial meltdown.
One of the giants at the center of that bailout is former employer, toxic and destructive.
There is one company whose former employees have run the US Treasury Department, the European Central Bank, the Bank of England, the World Bank, the New York Stock Exchange, and the Prime Minister's office in both Italy and the United Kingdom. One company, not a political party, not a government, a bank. And people have a name for it. They call it Goldman Sachs. Goldman Sachs is the most powerful financial institution on the planet. It has survived 2 world wars, the Great Depression, and the worst financial crisis in modern history. It has made billions betting against the very products it sold to its own clients. It has placed its people inside the highest offices of power in nearly every major economy on Earth. And it all started with a Jewish immigrant and a coat full of IOUs. The year is 1869. A 48-year-old German immigrant named Marcus Goldman steps off a crowded street in Lower Manhattan and hangs a small wooden sign outside a one-room basement office next to a coal chute. The sign reads, M. Goldman, broker and banker. Marcus had fled Germany in 1848 during a wave of revolution and anti-Semitism that was tearing through Europe. He arrived in America with nothing. No connections, no capital, no English. He worked for years as a traveling street peddler in Philadelphia, loading up a horse cart with clothing and goods and selling them door to door just to survive. But Marcus Goldman was not built to stay small. When he finally made it to New York, he spotted something that no one else was paying attention to. The small merchants and business owners of Lower Manhattan, the butchers, the bakers, the tailors, they constantly needed short-term cash to run their businesses. But the big banks wanted nothing to do with them. The loans were too small, the merchants too risky. So Marcus stepped in. He started buying their promissory notes, basically IOUs, for a small fee. Then he walked those notes across town to the commercial banks and sold them at a profit, keeping the difference. He literally carried them in the inside pocket of his top hat every single day, walking from merchant to bank, making a little money on every transaction. It was simple, it was scrappy, and it worked. Within a few years, Marcus's tiny basement operation was moving $30 million worth of commercial paper every single year. He brought in his son-in-law Samuel Sachs, then his son Henry, and in 1885, the firm officially became Goldman Sachs and Company. By 1896, they joined the New York Stock Exchange. The peddler's son had built a Wall Street firm. But here's where things start to get really interesting. Goldman Sachs didn't just grow, it transformed into something else entirely. Something far more powerful and far more controversial than a simple banking firm. In the early 1900s, Goldman pioneered something that changed how the entire financial world thought about companies. Before Goldman, banks valued businesses purely on their physical assets, buildings, machinery, land. Goldman's Henry Goldman said that was completely wrong. What mattered was a company's earning power, its future potential, not just what it owned, but what it could make. This idea sounds obvious today. That's because Goldman made it the industry standard. They used it to take Sears Roebuck public in 1906, then General Cigar, then F.W. Woolworth, Merck, General Foods. Goldman was becoming the gatekeeper of American capitalism, the firm that decided which companies got access to the money that made them giants. And as Goldman got richer, it got smarter about something most banks never thought about: power. For most of its history, Goldman operated like a secret society. It was a private partnership, not a public company, meaning it answered to no shareholders, no quarterly earnings calls, no public scrutiny, just a tight, closed circle of partners who kept everything inside the firm. The culture they built was brutal and brilliant at the same time. Junior analysts worked 100-hour weeks. The pressure was suffocating. But the ones who survived came out the other side with something no MBA program could give them: a Goldman Sachs network. And that network was worth more than almost any credential in the world. Because Goldman alumni didn't just go on to run other banks, they went on to run countries. Robert Rubin spent 26 years at Goldman, eventually becoming co-chairman, before walking into the Clinton White House as Treasury Secretary. Once there, he oversaw the repeal of the Glass-Steagall Act, a Depression-era law that kept banks from gambling with ordinary people's money. The repeal opened the floodgates. Wall Street went wild. And when the whole thing eventually blew up in 2008, Rubin was long gone, sitting comfortably at Citigroup, collecting over $150 million in pay. Then came Hank Paulson. Paulson spent his entire career at Goldman, eventually becoming CEO. In 2006, President George W. Bush asked him to become Secretary of the Treasury. The man in charge of regulating Wall Street was now the former boss of Wall Street's most powerful firm. 2 years later, the entire global financial system collapsed. In 2008, the world watched in horror as Lehman Brothers went bankrupt, Bear Stearns was wiped out, and Merrill Lynch was sold off in a panic. The whole house of cards that Wall Street had built, mortgage-backed securities, risky derivatives, toxic debt, came crashing down at once. Goldman Sachs had played this game too. They had sold these same products to their clients. But here's what makes the story extraordinary. While Goldman was selling mortgage products to investors, it was secretly betting against those same products on the other side of the trade. When the market collapsed, Goldman made billions, while its own clients lost everything. The SEC called it fraud. In 2010, Goldman paid a $550 million settlement, the largest penalty ever imposed on a Wall Street firm at that time. But that's not even the most jaw-dropping part of 2008. When the crisis hit its peak, Treasury Secretary Hank Paulson, Goldman's former CEO, was the man deciding who got bailed out and who was allowed to fail. Lehman Brothers was allowed to go bankrupt. AIG, which owed Goldman Sachs billions in insurance contracts, was bailed out by the US government to the tune of $180 billion. Goldman got paid in full. During the single worst week of the crisis, Paulson spoke with Goldman's then CEO, Lloyd Blankfein, 24 times, far more than he spoke to any other bank. He had to seek an official ethics waiver from the White House just to make the calls. People started calling it Government Sachs, not as a compliment. But here's the thing about Goldman Sachs. Every time the world expects it to collapse, it doesn't. While Lehman, Bear Stearns, and Merrill Lynch were being wiped off the map, Goldman converted itself into a commercial bank overnight, a regulatory change that took most firms years. The change happened in a single weekend. It gave Goldman access to emergency government funding that kept it alive. When the dust settled, Goldman's three biggest competitors were gone. Goldman was still standing, bigger than ever, and the revolving door kept spinning. Under Barack Obama, the Treasury Department and White House economic team were packed with Goldman alumni and Rubin acolytes. Under Donald Trump, Goldman's president Gary Cohn became the chief economic advisor to the president. Trump's Treasury Secretary Steve Mnuchin was also a Goldman veteran. So was Rishi Sunak, Goldman alumni, who became Prime Minister of the United Kingdom. Mario Draghi, Goldman alumni, became president of the European Central Bank and then Prime Minister of Italy. Mark Carney, Goldman alumni, ran the Bank of Canada, then the Bank of England, and now serves as Prime Minister of Canada. The list never ends. This is what separates Goldman Sachs from every other company in the world. Apple makes phones, Amazon delivers packages. Goldman Sachs shapes the rules of the global economy and then places its own people in charge of enforcing them. A German immigrant in a top hat carrying IOUs through the streets of Lower Manhattan built something that 155 years later sits at the center of almost every major financial decision made on Earth. Love them or despise them, and plenty of people do both, Goldman Sachs is not just a bank. It's the most powerful private institution in modern history, and it was built by a peddler with a coat full of promissory notes.